22 years old. Yeah. Oh, yeah. Still going at it. Still going strong at 72.
Yes. All right. 7:35 a.m. 1100 The Flag WZFG. I got an email from my mortgage guy who I go to. I've got a couple of things going on in that world, and so I get an email from my guy when he says, "Hey, rates are low. You want to refinance that thing you bought a couple of years ago?" And usually I say, that's okay. But this time when he sent me the note, he said rates are like 1.5% lower than when you bought your thing, and I could save you a couple $100 a month. So I'm like, huh.
No, I'm not asking.
But then I read a story where some economists said the Federal Reserve might cut short-term rates another 2 or 3 times. So I'm thinking, I may not be so quick to do it. So I've had some questions rolling around in my mind, and maybe you have too. So I'm very thankful to have in studio today Jeremy Helgoe, and Jeremy is a mortgage loan officer from First International Bank and Trust here in Fargo. Jeremy, good morning. How are you?
Good morning. I'm doing well.
I say Fargo. Are you in West Fargo or Moorhead or Fargo?
I'm Fargo, but my kids are in the West Fargo school.
Okay,
district.
there you go. So you get to keep an eye on the whole thing there. Thank you for coming in. Great to see you, and appreciate having you in early on this Friday to get our conversation rolling here today.
Absolutely. Thanks for having me.
You bet. Overall, what would you like people to know about where mortgage rates are at these days?
You know, mortgage rates have dropped over the last month and a half to 2 months with what's been going on in the economy. We are actually almost at historical low that we've ever been at. In 2012, we actually got where we're at today. And then rates stayed there for a while, and then they creeped right back up. And then in 2016, they dropped again, which we never thought would actually happen. And then they stayed there for a little while, and then the election happened. And then the economy shot right up, and then so rates went up at that time, and then here we're back again. So the last 36 months, anyone that has purchased or refinanced, rates were higher than where they're at today, and so it's been really busy, which has been really good to help out a lot of clients. I mean, there's a lot of people that are saving a lot of money either from refinancing or having that opportunity to maybe buy a little bit more house. You know, in today's environment, what you could buy in December, you can buy about $30,000 more than what you can in today
for the same price.
For the same price.
So about what are the rates then for home loans and refis?
You know,
it just varies.
It varies from client to client, but I mean, we're literally at the historical lows. You know, we're in the 3s, and we were in the 4s 6-8 months ago.
Isn't that something you can? I remember when our granddads refinanced their home, or our parents, and it was 18% or whatever when you think about that, and you could buy just a fraction of the house you can buy now.
Right, yeah, that was in 1983 when the bond market was way up there and rates were at 17-18% back then. So
isn't that something? Wow. Yeah. What makes mortgage rates go up and down?
It's the economy. You know, when you hear the feds come out and say about how, they're going to drop the rate, that actually doesn't have a direct impact in regards to mortgage rates. So when the Fed drops the rate, it doesn't automatically drop the mortgage rates itself. It's based upon how the economy withstands in regards to what the Federal Reserve is going to do. So if they drop the rates and it's technically I've seen it where they've dropped the rate and the rates have actually gone up. So it's based upon how the economy withstands how the Fed drops the rate.
Yeah, the Feds, that's kind of the overnight activity. The banks lend money to each other more so than long-term things like 30-year mortgages and so forth. So we have heard that a time or two as well. When someone comes to you and says, "Hey, Jeremy, I'm taking a look at this and it looks like rates are down a little bit. Is this a good time to refinance, or are they going lower? The economy, we're seeing signs that maybe the economy could slide even further in the days ahead." How do you help people walk through those options?
You know, everyone's on a different journey. And so it's a matter of listening to what their journey is and what their goals are. I mean, I can't predict what their goals are. So if they're going to tell me, "Jeremy, I'm planning on leaving in a couple of years because I'm going to downsize," we got to look at to say, what is the cost to do this refinance? Because we still have to have an appraisal and title work and all those fees that are associated with it. But we can do a no closing cost where we could raise the rate and have no closing costs, and that rate could still be much lower than what their current rate is at.
Well, yeah, that's tax deductible with your if you're itemizing your deductions.
Right. So I mean, everyone is on a different journey. It's a matter of figuring that out. Now, to say when should you lock in a rate? That's a great question because it's a stock price. It's like when should you buy a stock? You want to buy it at its low and sell it at its high. Just when you're in the middle of purchasing or refinancing. you want to get at the bottom, but you don't know where the bottom is, because tomorrow it could go up, tomorrow it could go down. So I always go back to the client saying, in your situation, are you willing to risk knowing that if you lock today, it could drop tomorrow?
Yep.
Are you going to be more upset, or are you going to be more upset if the rates go up?
Yeah.
So it's trying to fill that threshold that's there. So we feel that they're going to be here for a while. We don't know how long, but it's one of those things where, as you see in 2012 and you see in 2016, they were there for a period and they went right back.
And then they don't last forever. Nothing good lasts forever.
That's right.
Yeah,
that's right.
Yeah, I would think you talked about the time to look at maybe a bigger house. I think you said that you live in West Fargo. Do I remember you saying that right?
I live in Fargo. Yes.
You live in Fargo.
Yep.
So Fargo, West Fargo. There's a lot of families that have moved in here. Young families that are buying first homes, and now as those kids are starting to get a little bigger, that home is seeming crowded. I'm guessing there's a lot of young families that are starting to come your way saying, yeah, you know what, if I can afford a little bit bigger house, I sure could use the room.
Yeah, I mean, the market right now with these rates dropping, usually it slows down a little bit in July and August as people go on vacation. Is just the tradition. We're extremely busy from right at springtime, March, all the way until right up to the first part of July, and it usually slows down. And we had a record month this last month at First International. Had the most closings in July. We're actually looking to break that in August.
No kidding.
And September, the way it's looking now.
Okay.
But first-time home buyers, there's great products through North Dakota Housing and Minnesota Housing. And there's a lot of people that are inquiring. The biggest thing for people is they get intimidated coming into a bank.
Sure, they do.
And looking at their credit. And it's really just listening to their journey to say, hey, can we do something today? And if we can't, why? So there's been a lot of opportunity there.
Is the 30-year fixed rate mortgage, is that still the best seller? It's one we kind of all seem to know and understand. It used to be the arms and balloons were the thing a few years ago when the rates were higher, but is it 30-year fixes now?
When there's this cheap money right now, yes, it's 30-year fixed. And even people that technically have cash to pay for it, they're still taking out cheap money on this just for the fact that they're making more off of their other money that they have. So it's the 30-year fix is the norm that's out there. And in the 15-year is about, and again, rates are about half a point difference, usually on a 15-year fix. So sometimes it depends on the person's journey if their cash flow will allow that. So.
It used to be that if you want to take out a mortgage, you had to give every slice of documentation from every piece of your life that you've ever had. When people come to you say, Jeremy, I'm interested, but it always seems so confusing, and I'm going to have to look through documents for the next 10 years to find what I need for you. When they say to you, I'd like to do something, but it seems too complicated, what do you tell them?
Every client is a little bit different because everyone makes money differently, and so depending on the client, I've had it where it's been streamlined, where I can make it as simple. It depends on client to client, but it can be as simple as just a pay stub and a bank statement. But we technically can get that stuff right from their employer and right from their bank itself. So it can be very streamlined. But if you're a business owner, there's tax returns that are being required. But it's really, it's not that difficult. It's our job to communicate what's expected up front, and then at the end of the day, communicate all the way to the closing. And as long as you have that one-on-one relationship with that, everything is pretty streamlined.
You can tell the guy knows his stuff. If people want to call you and ask more questions and see if you can help them out, how they get a hold of you?
Yeah, absolutely. My office direct line is 701-298-4132.
298-4132.
Yes, sir.
Give a call. It doesn't cost anything to ask some questions, right?
That's right. Absolutely.
All right. Jeremy Helgoe from First International Bank and Trust joining us here on the Need to Know Morning Show. Thanks, Jeremy. Have a great day.
Thank you. You do the same.
All right. We're going to take a